Hello everyone, I hope you all are safe and healthy. So my name is Anshita and welcome back. In this video I'll be covering up question number 40 of both audit and law. Question number 40 means the case scenario number 40. This has been asked by a lot of you in the comment section of the previous videos, like please make a video on case scenario number 40 of audit, of law. So I thought let's cover this particular case study, this hit question 40 in a single video only. So I'll be covering both of these case studies in this video because a lot of you wanted it. So yeah, I've tried to break it down into parts. I'll try to make it simpler for you. It's not very tricky, but yes, a lot of provisions need to be recalled while solving this particular case study. So to make it easy, I will try showing up the provisions to you while solving the question, so that you will be able to recollect what you have studied in case you have forgotten any of it. Okay, so let's quickly start up with question number 40 of audit first, then we'll cover law, right? So let's begin. Case scenario number 40. Messrs. Suresh and Company, a partnership firm, has been appointed for the 7th consecutive year as the statutory auditor of Alkis Limited, an unlisted public company, for the financial year 2020-2021. Mr. Suresh is the engagement partner for the audit assignment of Alkis Limited. The engagement team, before starting the assignment, was made to read the policies and procedures designed to achieve desired quality control with respect to the type of assignment being undertaken. यहाँ तक कोई issue नहीं है, it's clear, right? Next, Mr. Suresh referred the engagement letter signed with the management initially and was considering whether there was a requirement to send a new engagement letter in light of the following circumstances in the company during financial year 2021. Two senior whole-time directors of the company have retired out of total 5 directors. 40% stake in the company was held by the promoters, which was reduced to 5% by selling the shares to general public. One more factory unit was set up in Gorakhpur this year. So see, इससे आपको from this I try to cover the whole case study in English language only, because a lot of you are from South India and you face difficulties when I speak in Hindi. So I'll try to cover up the case study in English only. So yeah, getting back to the question. So in this particular case, if you see here, we are talking about the engagement letter. Engagement letter. If you remember, essay 210 talks about engagement letter. In that we had studied, in case the auditor feels that there is no need to issue or there is no need to give another engagement letter, a new engagement letter to the management, he can avoid that. But that has to be done only if there are few situations which you'll have to consider before deciding whether a new engagement letter should be sent or not, right? So if you remember essay 210, in that we had studied a few examples or cases or scenarios where the auditor should give the new engagement letter, and if you remember, these points were there. For this particular thing, you must be thorough with essay 210. So see here, the management is changing. The directors, you see the 2 whole-time directors of the company have retired. So the management composition is changing. In this particular case, definitely you should issue a new engagement letter. Second is 40% stake in the company was held by the promoters, which was reduced to 5%. So there is a change in the stake. Stakeholders are changing, and to an extreme level. See, 35% got reduced. One more factory unit was set up. So there is a change in the business unit, right? So in these particular situations, circumstances, definitely the auditor should consider issuing the new engagement letter. Also, there is one more case that is mentioned over here, which also gives indication that yes, you should go for new engagement letter. Management has requested to cover 90% of the transactions with respect to each revenue line item this time, instead of 80% of the transactions as was set out in the audit plan, considering the materiality and the other factors. So all these examples are definitely giving a clear indication that you should issue the new engagement letter. Okay, So I've covered this portion, but once you move forward, you will realize that there is no question based on this part of the case scenario. So see, I have tried to cover this portion as well, because in case a question is framed from this paragraph, you must be able to solve it. So likewise, whenever you are also solving a particular case scenario and you realize that this particular scenario is related to this concept or this provision, you should try to recollect it along with the case study you are reading, alongside when you are reading the case scenario, because this will help you identify the questions that could be asked from the case scenario. Maybe they can give you the same case scenario in exam, and maybe they can ask you a question from this para which is not asked here. So chances are there you should be able to understand what more questions could be from a particular case. Okay, let's move further. The following data is presented from the audited financial statements of Alkis Limited for the financial year 1920, which means we are doing the audit of financial year 2021, and they are saying that the data of financial year 1920 is given to you, which means the previous year data is given to you, the latest audited financials are given to you. Now, why did I emphasize on this? Because whatever limits you are going to check, you are going to take those limits from the latest audited financial statements only, for the purpose of checking whether the applicability is there or not, right? So here what all provisions you will be required to understand or recall while solving the questions, I have covered it over here, so that it becomes easier to revise first and then move on to the question, so that you'll be you will feel more confident. When you know the provisions, you are able to understand or recollect the provisions, you will be able to solve the questions better. So it's better to revise the provisions first and then move on to the questions, just for the sake of confidence, because since you were not able to solve this, there are high chances that you have missed out some point from the provisions, right? So let's just recall the provisions first and then we'll move on to the questions. So first question is whether CARO is applicable in this particular scenario or not. So if I talk about CARO, so we have applicability of CARO. I have opened up the pages, relevant pages from the study material, so that it becomes easier for me to quickly help you recollect, because if I would have written the limits over here, it would have been a little time consuming for me as well, and I don't want to spend so much time in solving myself and then putting up a video that is going to just waste your time and my time as well. So I thought of using this particular PDF, I thought of leveraging this effort over here from the study material, and we can just quickly cover it up, right? Let's quickly start. So if I talk about the applicability of CARO, so CARO is applicable to all the companies, okay, even to a foreign company, which is defined under section 2 clause 42 of the Companies Act 2013, but there are a few specific exemptions that you need to know. For example, the banking company, insurance company, section 8 company, one person company and the small company are totally exempted from the applicability of CARO, and private limited company is also exempted, but there are some certain conditions that you need to check before you call a private company being exempted. So here we don't need to see the private company exemption list or the criteria when the private company is going to be exempt, because this particular company is a public unlisted company. We had studied this, we had read this particular line over here, that this particular company is an unlisted public company. So this is a public company, not a private company, which makes it very clear that this particular company has to apply CARO on it, right? So CARO will be applicable on this particular company. So this particular thing is very, very clear now. Let's talk about the applicability of audit committee on this company. So audit committee ke liye we need to see the section 177. Section 177, what does that section say? So section 177 says that all the public companies with the paid up capital of 10 crore or more, right? या फिर public companies having a turnover of 100 crores or more, या फिर all public companies having in aggregate outstanding loans, debenture deposits exceeding 50 crore rupees will have to have audit committee in their company. या फिर कंपनी क्या हो सकती है, लिस्टेड पब्लिक कंपनी हो सकती है. इफ इट्स अ लिस्टेड पब्लिक कंपनी देन ऑडिट कमिटी प्रोविजंस विल बी एप्लीकेबल. if not, then the following class of companies, that is the public companies, will be considered. That is unlisted public companies ke liye we have certain limits. If these limits are met, then you will have to apply the provisions of section 177. But you have to remember that these particular following classes of unlisted public companies are not covered over here. Even though the limits exceed in their case, still you are not going to apply the audit committee provisions. Why? Because they are coming under this heading, which is exempted, which means if it is a joint venture, wholly owned subsidiary or a dormant company, then you will not apply the provisions of section 177. Now, in our case, this particular company is not falling under this exemption. So hence these limits need to be checked while you are determining this fact whether audit committee provisions will be applicable or not. So if I check over here, do I have the paid up share capital of more than 10 crores or more? No, it's 8 crores, limit not satisfied. Next, all public companies having turnover of 100 crore rupees or more. Turnover is less than 100. Then we talk about the aggregate of loans, debentures, deposits. It should have been 50 crores or more. So if we see over here, not 50 crores or more, but exceeding 50 crores. So sorry, my mistake. In this particular case, deposits and loans ke case mein you have to see whether it exceeds 50 crores. But in case of the turnover and paid up, even if it is equal to the limit mentioned, then the provisions will become applicable. I hope you are able to understand. I hope I have not confused you all. So see, in case of paid up share capital and turnover, you have to see whether the limits are met. More than or equal to का sign है उन दोनों के आगे. But if I talk about the borrowings, deposits, loans, in that particular case, you will see whether it exceeds the limit, right? Equal भी होगा, तो provisions would not be applicable. Okay, so if I see the limits are not being met, therefore audit committee provisions are not met. Hence, the audit committee provisions are not applicable in this particular case. This company is not required to form a audit committee. Correct. Next, we have the applicability limits ke liye we need to check the internal audit limits as well. So if I go to the internal audit chapter, I will see that internal audit is applicable. Section 138 would be applicable. Okay, so we'll have to see whether this particular company falls under these classes of companies which is mentioned over here. So if it's a listed company, internal audit would be applicable, but this is not a listed company case. This is a unlisted public company case. So we need to see whether these criteria are being met or not. So if I talk about the first criteria, is paid up share capital of 50 crore rupees or more. So if I see the paid up share capital, it's not 50 crore or more. Turnover 200 crores or more. 200 crores or more, turnover is not there. Next is loans, borrowings from banks and public financial institutions exceeding 100 crore rupees at any point of time during the year. It's not happening over here. Next is outstanding deposits of 25 crore rupees or more at any point of time during the preceding financial year. एक दिन भी, even for one day, if your outstanding balance was of more than or equal to 25 crores, then what will happen? The internal audit provisions will become applicable to you. Now in this case, if I see the public deposits are 28 crores, which is definitely more than 25 crores. So the internal audit provisions will become applicable just because your outstanding public deposits are 28 crores, which is more than equal to 25 crores. Now in this particular case, if they would have given in a way that the public deposits, outstanding public deposits is 15 crores, but on 15th of May, the balance was 28 crores. So please tell me whether internal audit provisions would be applicable or not. Yes. Why? Because at any point of time, if your outstanding balance, even for 1 hour, even not 1 hour of course, even for a day, if your outstanding balance was exceeding or equal to 25 crores of this public deposits, then in that case the internal audit limit would be applicable. So you'll have to be very mindful of this fact that in case of borrowings and in case of deposits, you have to see whether on any point of time, किसी भी time पर आपका outstanding balance, if it was more than the limits or equal to the limits, then you will have to apply the provisions of internal audit. Now, so you know why this particular internal audit is applicable to this company, because of the public deposits limit. I hope you have all got the point. I hope I have not confused you all, or it was not so much to digest at a point, right? So I hope you are able to recollect. I hope you got the clarity about the limits, etc. Okay. Let's move on to the next para and understand it better. Mr. Suresh, while preparing a report under section 143 of the Companies Act 2013, made a statement with respect to remuneration paid by Alkis Limited to one of its directors, Mr. Mahesh, was in excess of the limit laid down under section 197 and also gave such other details as prescribed. So you know that whenever you are issuing your audit report, you have to issue your audit report. In your audit report, you mentioned this fact that one of the directors of the company got the remuneration which was more than the limit which was laid down under section 197, and you have mentioned the limits over there. So yes, this is perfectly fine. Yes, you have to report such matter in case this happens. I'll show you the provision again so that it becomes easier for you to recollect, because because we have a lot of syllabus, so sometimes it happens we are unable to recall what we had studied before. But although this is very easy and our exams are very near, so I hope you are able to recollect everything which we are studying over here. So the auditor of the company shall in his report under section 143 make a statement as to whether the remuneration paid by the company to its director in accordance with the provisions of the section, whether remuneration paid to any director is in excess of the limit laid down under section, and give such other details as may be prescribed. So this you have to do. You have to give these details as per this particular point. So I've given you a reference where we are studying. So this is the duty of auditor under section 143 subsection 3, right? I hope you got it. Okay, let's move further. Now, Mr. Suresh, for additional reporting purpose while auditing in respect to compliance with CARO 2020, observed the following relevant to para 3.7. Okay, so इस केस में you need to know the para 3.7 के अंदर what was the provision. Let me take you through the provision for ease. So your provision says that whether the company is regular in depositing the undisputed statutory dues, including the GST, Provident Fund, employee state insurance, income tax, sales tax, service tax, duties of custom, etc., to the appropriate authorities, and if not, see, you have to see whether the company is paying the undisputed dues, statutory dues, whether the company is regular in depositing these dues. If not, then you will have to see the extent of arrears of outstanding statutory dues as on the last day of the financial year concerned for period of more than 6 months from the date they became payable shall be indicated. See, this is a very tricky para if you don't break it into parts. It is very tricky. They are going to test it. In this particular case study also they have tested it, right? So if you are not thorough with the provision, thorough with the point, thorough with the para, you will not be able to crack it. You will definitely make a mistake. So please understand. What are they saying? They are saying that if you are not regular in paying the undisputed statutory dues, then what will happen? What do you need to see as an auditor? You need to see whether the amount, I'm so sorry guys, my laptop got shut down. So yeah, coming back to the point, where was I was saying that, see, you have to be very mindful. You have to see what is written. So in case the company is not depositing the statutory dues, the undisputed statutory dues on time, then you'll have to see the outstanding statutory dues that are there on the last day of the financial year. First thing is that you have to see whether the amount is outstanding as on the last date of the year. If it is outstanding, then you'll have to see whether the amount payable has been there for more than 6 months from the date they became payable. So for example, if your amount became payable on 12th of April and it's still outstanding as on 31st of March, then obviously the period has been more than 6 months. In that particular case, you will have to report this amount. In case your amount was due to be paid on 1st of January and it's still outstanding as on 31st of March, then tell me whether you will have to report this particular amount over here. No, you will not be required to report this particular amount. Why? Because the duration of it being pending or being outstanding is still not more than 6 months. I hope you got the point. See, I have also explained it over here through, in this particular question, the provision will be revised again and again. So, we'll solve it together. In the first case, first thing you will have to, मैंने ये chart भी बनाया है for ease of understanding. So, first of all, your primary focus should be, primary question should be whether the amount is the amount of undisputed statutory dues, whether it is outstanding on 31st of March or not. You'll have to see that. So here, if it's not outstanding as on 31st of March, यहाँ पे due ना लिख के ना, I should better write down outstanding. Okay, so it's not going to happen from here, it will happen from here. Oops, that is so bad. Just a second, guys. So here you should actually ask the question whether it is outstanding on 31st of March or not. If it is outstanding as on 31st of March, then your further questions will come up. If it is not, then it's perfectly fine. You don't need to show that amount under this para. Okay. Now, if it is outstanding as on 31st of March, then you will have to ask this question whether the amount being not paid from the date it became payable is more than 6 months or not as on 31st of March. If it is, then you will have to report. If it is not, then you don't have to show. So let's first of all read this particular statutory due. Let's read the details about it and then decide whether this will be reported or not. So income tax demand for AY 2018-19. So if I see the demand, पहले तो demand की बात हो रही है, ठीक है. This is more specific. आपका ये payable हो रहा था on 25th of September 2020. You have made the payment on 28th of March 2021. Do you think you need to consider this particular due, this particular statutory due in your para? No. It's not outstanding as on 31st of March. कहानी ख़त्म. GST की बात करते हैं तो GST का जो amount है that is 1.5, which is undisputed amount. This was required to be paid on 30th of October 2020 and you have made the payment on 4th of April 2021. So first question, whether it was outstanding as on 31st of March? Yes, it is outstanding as on 31st of March. Now you'll have to ask yourself whether from the date it became payable till 31st of March, whether this particular amount has been payable for more than 6 months. So let's calculate. October say November, December, January, February, March. Till March, this particular amount has been shown as payable, but this is only for a period of 5 months, not 6 months. So the time duration criteria is not getting satisfied. That is why this particular entry would not be showed in para 3 clause 7. Next is customs duty. Customs duty amount is 0.8 lakhs. It was due to be paid on 20th of September 2020 and it has been paid on 10th of April 2021. So tell me whether the amount was outstanding as on 31st of March or not. Yes, the amount was outstanding as on 31st March. So the first criteria is satisfied. Now you'll have to see whether the amount is payable as on 31st of March for more than 6 months or not. So if I see from September, October, November, December, January, February, March, yes, till March 31st, this amount has been under payable for more than 6 months, because on 19th of March the period of 6 months has already lapsed and still it's not being paid till 31st of March. So in this case this will definitely go under para 3 clause 7, right? Let's see the last one, provident fund. Provident funds amount is 0.45. You'll have to see undisputed only, right? The likha hai specifically undisputed statutory dues. 12th October 2020 and it has not been paid till date. In this particular case also it is outstanding as on 31st of March. So this criteria is satisfied, but if I move on to the second criteria, you'll have to see whether the period of 6 months has been there or not. So if I calculate, so October say November, December, January, February, March, okay, till March only 5.5 months or maybe a less than that has happened, not 6 months, not more than 6 months. So this particular case also you will not apply the concept or you will not report this particular matter in para 3.7. So only this has satisfied both the conditions for being reported under para 3 clause 7. I hope you are very clear on this point, because this is quite important. Okay. Next line is, also a representation was made to GST department for waiving a penalty of 1 lakh for the late payment of GST demand. So see, this is a representation which was made. So here there is not clear indication of being undisputed amount, right? So we are not going to consider it over here. Next, the Board of Alkys Limited declared interim dividend of 20 lakhs on 20th of May. So here the dividend provisions will come into play, and you'll have to recall the dividend provisions that you have studied in the company's audit chapter. So interim dividend ho ya final dividend ho, the provisions are same for both of them. So that Board of Alkys Limited declared an interim dividend of 20 lakhs on 20th of May 2021 to its 180 shareholders. So see, those people who are not very clear about whether the provisions of final dividend are applicable to interim dividend as well, they might think that this particular para is irrelevant, because the provisions of dividend are only applicable to the final dividend and not to the interim dividend. So they might make a mistake, but so they have cleverly tested this point as well in this particular case scenario, that yes, the provisions that are applicable to a final dividend are similarly applicable to an interim dividend as it is. Okay. So you'll have to be very sure about every provision that you apply to a final dividend. You will have to apply to an interim dividend as well. So in this particular case, the company has declared a dividend, the interim dividend of rupees 20 lakhs on 20th of May 2021 to its shareholders out of the surplus in the profits and loss account, and such dividend amount was deposited in a separate bank account with a branch of SBI, which is okay. Now you will see, you have to deposit this amount in a separate bank account. Within how many days you should be, you should have deposited the amount. So within 5 days you have to deposit. You all know that. So till 25th of May, this amount should have been deposited to a separate bank account for the purpose of payment to the shareholders, right? Now, dividend amounting to rupees 1 lakh was not claimed by a shareholder, Mr. Rohit, till 19th of June 2021. So till when do you wait? Okay, let's first of all complete the question, then I'll talk about the provisions. Dividend amounting to rupees 1 lakh was not claimed by a shareholder, Mr. Rohit, till 19th of June 2021. And so the said amount of rupees 1 lakh was transferred to unpaid dividend account on 31st of July 2020. See, I have made a chart over here for the calculations of applying the provisions of dividend for ease. Let me see if this helps. Most likely a lot of you might have questions around this, because of which you might have found this particular case study difficult, or maybe not. Let's see. Let's understand this. So in this particular case, what is happening? There is one shareholder who has not claimed his amount of dividend till a particular date, and this particular amount was transferred by the company to unpaid dividend account on 31st of July 2020. So as per the provisions, what do you need to remember? First of all, let's recall the provisions and then talk about what did the company do and whether they were right or wrong. Okay, so where is it? I had opened the page. Okay, this is the page only. Yeah. So first of all, the deposit of amount of dividend in a separate bank account, the provision says the amount of dividend including the interim dividend, remember this, should be deposited in a scheduled bank in a separate bank in a separate account within 5 days from the date of declaration of such dividend. We have already applied this provision, and we have already calculated a date, which is 25th of May. Next, let's talk about the unpaid dividend account section, because that is what is more relevant over here. Section 124 of the Act provides that the dividend declared which remains unpaid or unclaimed, in both these situations, whatever situation arises, these provisions are applicable, that all the dividends which are declared which remain unpaid or unclaimed within 30 days from the date of declaration of such dividend shall be transferred by the company to a special account called the unpaid dividend account. Okay. So within a period of 30 days from the date the dividend is declared, the company will have to transfer this dividend to the unpaid dividend account. Okay, opened in any scheduled bank. Such transfer shall be made within 7 days from the date of expiry of the said period of 30 days. So first of all, what they are saying, you declare the dividend, you wait for a period of 30 days. Let the person who is eligible to claim this amount claim the dividend, or you will have to pay within a period of 30 days, right? But there might be a situation where you are not paying the amount to a shareholder because of XYZ reasons, or the shareholder has not claimed his amount due to XYZ reason. In those situations, after the expiry of these 30 days period, you will have to transfer the unpaid amount or unclaimed amount to a separate bank account within a period of 7 days. We are giving you 7 days time to deposit this particular amount, okay? In case you don't do that, in case you make a default in transferring the amount which is unpaid or unclaimed, then you will have to pay interest at the rate of 12% per annum on the amount which is not transferred by you on time, okay? So whatever time lapse is there because of which you have made a default, on those days which you have made a default, in that particular case you will be charged interest rate of 12% per annum. This is not actually charged, but this amount of interest you will have to pay to the shareholder whenever that person claims the money. So the shareholder gets this, becomes eligible to claim this particular interest because of your default of not transferring the unpaid or unclaimed amount to the unpaid dividend account on time. Okay, I hope the provisions are clear. Let's move on to the case study and understand what did the company do. So see, the company had declared the dividend on 20th of May. So within 30 days of time, the company should have paid the dividends, okay? But the company paid the dividends, but one shareholder did not claim 1 lakh rupees dividend. Till when? Till 19th of June. If we calculate 30 days from 20th of May, 19th June comes out to be the day, the 30th day on which the payment should have been made. Okay? The claims should have come up. In case that does not happen, within a period of 7 days from that, you will have to transfer the unclaimed or unpaid amount to the unpaid dividends account in any scheduled bank, right? So if we calculate the 7 days from 19th of June, the date comes out to be 26th of June. 26th of June tak, the company should have transferred this unclaimed or unclaimed amount, because here the unclaimed amount case is there. So we will call it unclaimed amount. So in this case, the company should have transferred the unclaimed amount within a period of 7 days from 19th of June to a unpaid dividend account, right, which comes out to be 26th of June. Till 26th of June, the company should have transferred the amount. But what did the company do? The company did make a transfer, but the company transferred it on 31st of July. Last date was 26th of June, but they made the payment on 31st of July, which means there is a time gap of 35 days for which the company kept the money with itself, which was not allowed, right? So in this case, the company is under default, and the company will be charged interest at the rate of 12% from 26th of June till the date of transfer, that is 31st of July, which turns out to be 35 days, 31 days of July and 4 days of June, right? 26th June se 31st of July tak. So you will have to calculate the amount of interest that the company is liable to pay to the shareholder because of this particular default. So 1 lakh का 12% into 35 days divided by 365 comes out to be 1150.6. वैसे हम इसको 366 days भी ले सकते थे because 2020 है, but it doesn't matter, बहुत ज़्यादा फ़र्क नहीं आएगा. Still, you can consider this fact as well, right? So I hope I have tried to explain it again and again, but yes, I know I have been a little fast in explaining. The reason is because your exams are very near, and I don't want you guys to waste a lot of time. If I speak a little slow, it might be the case that you might lose interest, or you might find the videos time consuming. So that is why I'm just trying to cover up quickly, because maybe a lot of you don't have doubts in this particular case, right? So yeah, just trying to cover it up quickly. If you don't understand any particular part, just rewind the video again, pause, watch, pause, watch. Or you can maybe speed, you can make the speed slow by using the speed options yourself, right? So I hope you are able to understand this particular case scenario. Yes, a lot of provisions were involved in this case scenario, but see, this is why they ask the case scenarios, right? They want to test all your concepts, all your provisions, whether you are able to recall all this stuff, whether you are able to apply all the stuff that you have studied in so many chapters. This is why they test in a particular case scenario, right? So you should be thorough with the provisions, you should be able to apply the provisions, only then you'll be able to answer the questions correctly. So let's quickly move on to the question number 1 without wasting any further time, which says which of the following option is correct with respect to Alkis Limited. First is Alkis Limited needs to form an audit committee. So for this we had already revised the provisions, we have already discussed the provisions, we have already come to a conclusion that audit committee provisions are not applicable to this particular company. Why? Because this is an unlisted public company and the limits that were mentioned in the section are not becoming applicable to this case. Which section was applicable? This is section 177 audit committee का section होता है, but this section is not becoming applicable in this particular case, so they don't need to form an audit committee. तो ये option आपका already eliminate हो गया, we don't need to read any further. Next, Alkis Limited need not form an audit committee. Further, the provisions relating to internal audit is also not applicable. तो यहाँ पर गलती होगी because internal audit के provisions are applicable. That is why this option is incorrect. Next, Alkis Limited need not to form audit committee. Further, provisions relating to rotation of auditors is not applicable, which is correct. Applicable to, not applicable, right? However, the provisions with respect to internal audits are applicable to it. Yes, this is what we concluded. Alkis Limited needs to form an audit committee. तो ये option भी आपका क्या हो गया? गलत हो गया. So that is why this particular option C is correct in this case. Let's move on to the next question. Questions बहुत quickly हो जाएंगे because we have already discussed the provisions while doing the case study, while reading the case study. So I'll just quickly cover up the questions. I'll just quickly, tell you the reason why other options are incorrect and why the answer, this particular answer is given, right? So I'm not wasting a lot of time in explaining it again because it's of no use, right? So question number 2, under which section of the auditor's report Mr. Suresh needs to report with respect to excess remuneration being paid to Mr. Mahesh? So if you remember, these type of matters go under the other legal and regulatory requirements because it is a requirement that as per section 197, this amount is the maximum remuneration that you can give to a director. In case you are giving any excess remuneration, then you are, you need to report this particular matter in some in the other legal and regulatory requirements because it is part of a regulation, part of some law, right? Qualified opinion में नहीं जाएगा because it's not wrong. Others matter para में भी नहीं जाएगा. Auditor's responsibilities may be of course it won't go, right? Let's move on to the next part, which says what total amount of statutory dues needs to be reported Mr. Suresh para 3. So ये हम already discuss कर चुके हैं बहुत ज़्यादा detail में with every explanation, with everything, with charts and everything. So we concluded that customs duty, that is this particular entry, is only relevant to go in para 3 clause 7. So 0.80 is the total amount which will go under this particular para. So yes, this is incorrect, this is also incorrect. Correct option is 0.80. Let's move on to the next question. How much of amount of interest Alkis Limited would be liable to pay with respect to unpaid dividend amount? तो we have already calculated 1150.6. मैंने ऊपर calculations दिखा रखी हैं. I'll show you again quickly. आप वीडियो पॉज कर लेना प्लीज़ एंड फटाफट से देख लेना what is the calculation, what is the amount. I have calculated the number of days over here, I have calculated the interest over here. Okay, so let's quickly move on to this particular question which says option D is correct. Okay, round off कर दिया. Next, by what date the amount of interim dividend should have been deposited in the scheduled bank after being declared, and also by what date the unpaid or unclaimed dividend amount should have been transferred to the unpaid dividend amount. So we have already calculated कि आपको वो पे कर देना चाहिए था, डिपॉजिट कर देना चाहिए था विद इन अ पीरियड ऑफ 5 days. तो मेरी डेट आई थी 25th of May, मैंने ऑलरेडी ऊपर आपको दिखाया था. सेकेंड इज ऑल्सो बाय वॉट डेट अनपेड और अनक्लेम्ड डिविडेंड शुड हैव बीन ट्रांसफर्ड. ये भी हमने कैलकुलेट किया था 26th of June इज़ अ ड्यू डेट, लास्ट डेट, बट एक्चुअली कंपनी ने जो पेमेंट किया था दैट वाज ऑन 31st of July. दैट वाज द फॉल्ट. इसकी वजह से 35 days मेरे कैलकुलेट होकर आए थे. सो दिस इज़ द डेट रेलेवेंट, दिस इज़ द रेलेवेंट डेट. सो इफ़ आई सी 25th of May, 26th of June is the correct answer. I hope you all are clear with this particular case study. I hope you are able to understand the provisions well, and I have been able to make this question clear to you, or I hope I was able to do justice to this case scenario, because a lot of people were asking case scenario number 40 of both audit and law. So I hope audit case scenario number 40 is pretty clear to you now. In case you have any doubts, please try to watch the video again, watch that particular section again, and still if you have any doubts, you're not very clear why I said a particular thing, you can definitely comment down below and I will try to resolve your query as soon as possible. Okay, so yeah, let's now do the case study number 40 of law and we'll be done with this video. Okay, so case study number 40 is to provide banking services to the people living in Immaculum, Kerala, which still was a far off location and devoid of accessing the finance from nationalized banks and non-banking financial companies. Nagarjun, his close friends Krishnamurti, Raghunath, Govindam, Radhakrishnan, Vijay Krishnan and Chaitanya, who were experienced and dedicated persons from the field of business, trade and industry, thought of opening a Nidhi company. So from this particular line we get to know that this case study might be related to a Nidhi company provision, and they might have tested a lot of Nidhi company provisions in this particular case study. Okay, so they thought of opening a Nidhi company which would act as the safest and the cheapest way of inviting deposits from them and granting them loans. Vinayak Strotam Nidhi Limited was incorporated by Nagarjun along with his group of close friends on 10th of July 2014. So this particular date they all incorporated a Nidhi company in Immaculum district of Kerala. The authorized capital of this Nidhi, which wanted to nurture the habit of caution and savings among the members by receiving deposits from them and lending money to them only for their mutual benefit, was rupees 70 lakhs divided into 7 lakh equity shares of rupees 10 each while issued. So the issued capital was rupees 70 lakhs, which was like 7 lakh equity shares because the shares were of rupees 10 each. And the paid up share capital stood at a figure of 60 lakhs with just 8 employees. So if you remember, for Nidhi company you must see whether there is the minimum paid up capital requirement being satisfied or not. So what is the minimum paid up capital that a Nidhi company should have? So it's rupees 5 lakh. In our case, so it's rupees 5 lakh. In our case, how much is it? It's 60 lakh rupees, which is obviously more than the minimum requirement, so there is no issue with this. Next is, through this Nidhi, savings could be deposited in form of savings account, recurring deposit, fixed deposit and daily deposit accounts, while Vinayak Srotam Nidhi Limited granted loans to the members only against the securities of immovable properties and movables such as gold, silver, jewelry, deposits, national savings certificates, life insurance policies and other government securities as per the prescribed rules for Nidhi companies. Alright. Customer centricity was at the core of Managing Director Nagarjun and 3 executive directors Krishnamurti, Raghunath and Govindam, and it was this belief that had led the business to build long-term relationships. Okay, since its inception, Nidhi, okay, slip of tongue, I'm so sorry. So since its inception, the Nidhi was earning profits year by year. Very good. In anticipation of growing and rendering better services to the members and stabilizing it as a profit center, Nagarjun and his dedicated team felt that there was a demand for opening some branches in the district itself. Okay, so they thought of opening some branches in the district itself, some branches in the district Aluva, right? No, the branch was not Aluva, the branch was something else. We had read about it at the top of this page. So yeah, they were in the Immaculum, Kerala. So in this particular district they had incorporated their Nidhi company, right? This is important, that is why I am focusing on this. Let's move on to the next line. So here they are saying that they thought of opening some branches in the district itself, जहाँ पर already उनकी निधि company थी, वहीं पर they wanted to open up some more branches. Thus, Vinayak Srotam Nidhi Limited opened 3 more branches at Aluva, Kannanur, Kothamangalam in Imakalam district of Kerala. These branches were inaugurated with more focus on deposit mobilization and lending, which was a core business of this Nidhi. The Nidhi brought within its fold experienced persons like retired senior executives from the national and multinational banks to seek guidance and build it as the pioneer in rendering best services by adopting latest technology. By the end of March 2021, Vinayak Srotam Nidhi Limited had 11,000 members and 200 employees. That's very good. In the track of fast growth and with foresightedness in mind, Nagarjun desired to open a new branch in another district. So earlier he had opened 3 new branches in the same district where the Nidhi company was incorporated. Now he is thinking of opening a new branch in another district of Kerala. He chose Kannur district since he had a special bonding with this place because he was an alumnus of Kannur University, having graduated in commerce from this famous university. But instead of doing that way, he opened another Nidhi company. So he did not open a new branch at a new district. Instead, he preferred opening another Nidhi company by the name of Vinayak Srotam Kannur Nidhi Limited in the Kannur district of Kerala. Okay, now let's move on to the questions. Okay, so the first question says, Kartike, a resident of Aluva, desirous of opening a savings account with Vinayak Srotam Nidhi Limited, but before opening such an account, he must be a member, which is right. Only the members can, open the savings account with the Nidhi company. So first of all, you'll have to become a member of the Nidhi company. Only then you'll be able to open the account. Now, how many minimum shares must be issued to him so that he becomes a member? So, in order to open a savings bank account, you must have at least 1 share of that Nidhi company. Why? Because if you have 1 share of a Nidhi company, then only you will become the member of the Nidhi company. Once you become the member, then only you will be able to open the savings account, right? So, in this particular case, what should be the answer? The answer should be that there should be at least 1 share which Mr. Kartike should be holding. Why? Because only then he'll become a member. Once he becomes a member, he can definitely open a savings account, right? So in this particular question, this A answer is correct. Why? Because यहाँ पर ही minimum 1 share दे रखा है. In all other options, the number of shares given is incorrect. Okay. Next question. Suppose Krishnamurthy, one of the directors of Vinayak Srotam Nidhi Limited, were to hold office of director for a term up to 10 consecutive years, then when shall he be eligible for reappointment as the director? So for a director to get reappointed, what is the cooling period required? So a particular director can be a director for a period of 10 consecutive years. After that, there will be a gap of 2 years that he'll have to maintain, and only then he can be reappointed, right? So the cooling period कितना हो जाएगा? 2 years का आपका cooling period हो जाएगा. So first question में after 6 months expiry लिखा हुआ है, after 1 year लिखा हुआ है, option C में after 2 years लिखा हुआ है. So obviously the correct answer is option C, that is after expiry of 2 years of ceasing to be director of Vinayak Srotam Nidhi Limited, he shall be eligible for reappointment as a director. Last वाला point भी कर रहे थे, इसमें 3 years लिख रखा था, right? चलो, next question is question number 3. Maximum how much interest, maximum they are asking, maximum how much interest Vinayak Srotam Nidhi Limited can offer on fixed and recurring deposits accepted from its members. So इसके लिए there is a condition that the interest rate that is being offered by the NBFC on its public deposits, that rate is the maximum rate that a Nidhi company can offer on the fixed and recurring deposits. इससे ज़्यादा आप लोग नहीं दे सकते rate of interest, right? These are all as per the provisions that you must have already covered in the Nidhi company chapter. There is nothing difficult over here. I just found 2 questions a little tricky. I'll tell you why they are tricky, and I think because of those 2 questions only you had asked this particular case study to me. Otherwise the question is quite straightforward, pretty straightforward. You must have already solved all these questions because they are very direct, nothing new in this. So I'm hoping that your doubt is in the last two questions, not in these simple questions, of course, but in case you had doubt, so you'll have to refer to the Nidhi company provisions once again, because these are, straightforward questions. I cannot explain why this is correct or why this is incorrect, because there is nothing to explain, right? Okay, let's move on to the options. So, excuse me, as I told you, NBFC, whatever rate the NBFC is offering on its public deposits, that is the maximum rate of interest that a Nidhi company can give on its fixed and recurring deposits. So if I see over here, so first question mein they have mentioned NBFC on its public deposit jitna rate of interest de raha hai, that is the maximum rate of interest. Next is इधर आपका दे रखा है nationalized bank, इधर दे रखा है regional bank, and last option में आपका दे रखा है cooperative bank. So all these options are totally incorrect. What is correct is this option, right? Let's move on to the next question, question number 4. Now this question and the next question coming up just after this, both of them are quite tricky. I'll tell you the reason why they are tricky, because as such they are not tricky but there is a particular point because of which they have become tricky. I'll tell you why. So question number 40.4, in which year at the earliest Vinayak Strotam Nidhi Limited would have got the approval to open branches at Aluva, Kannanur and Kothamangalam in Immaculum district of Kerala. So this is the particular district name in which the Nidhi company was incorporated at first, right? So now in the district where the Nidhi company was incorporated, if you want to open up branches, you need to take the permission of the regional director in case the number of branches that you are opening up is exceeding the number 3. Okay, in case the number is not exceeding 3 but you are opening a branch in a district or in an area which is beyond beyond the district where a Nidhi company is incorporated, in that case also that means outside the boundaries of the district, if you are opening any branch, even though the number has not exceeded 3, still you will have to take the approval from the regional director, right? These are the provisions that I just stated. They are as per rule number 10. But I was a little surprised because when I was searching for the relevant provision in the study material, I could not trace rule number 10 over there. I don't know whether I missed it or maybe the institute has not given it in the study material. I could not find it there. So I had to Google up the relevant rule number to know the provisions and to apply the provisions in this particular question, and in fact in the next question as well. So I'm trying to explain it over here because I think institute has missed this question, but missed this rule in their book, in the study material, but they have given a question in the case study booklet. So this is a little surprising, but now since you have already solved this question, you know the provision, you might answer it in case exam mein this question is asked. So I'll just show you the provision quickly, so that in case this particular provision is asked in exam, you are able to crack it. So let me see why this not opening up. Okay, yeah. So it's working now. I'll just quickly show you rule number 10. Okay, yeah, here it is. So as per rule number 10 of Nidhi rules 2014, a Nidhi company can go for opening branches only if it has managed to gain net profits after tax continuously within the last 3 financial years. So first of all, this is very important. If you want to open up a branch, first of all it will be seen whether your Nidhi company was able to generate profits during the last 3 years. Only after that you will be allowed to open up a branch. First condition is this, that there should be profits for a continuous period of 3 years, right? I'm so sorry. According to the provisions prescribed in sub-rule 1, a Nidhi company can open up to 3 branches in areas of the district. So in the district where you have opened, you have incorporated the Nidhi company, in that particular district you can open up to maximum 3 branches. Okay? This can be opened up only if your Nidhi company was able to generate profit after tax for a continuous period of 3 years, right? Next, a Nidhi company should take the regional director's permission to open more than 3 branches either in the district. If you want to open up branches in the district, and the number has exceeded 3, then also you'll need to take the permission of regional director. या फिर आप outside the district boundaries भी open up कर रहे हो branches more than 3, in that case you will need to take the permission of the regional director. I think before showing you this particular provision, I had made a mistake in saying that even if you open one single branch in the in the area which is outside the boundaries of the district, you'll need to take the permission of regional director. No, that's not correct. If you open up more than 3 branches, either in the same district where your company is located, or even outside the boundaries of the district, in both these cases, if and only if your number of branches exceeds the number 3, then only you'll need to take the permission of the regional director, otherwise not. Okay, so if your number of branches that you are planning to open up is exceeding 3, चाहे फिर वो आपने विद इन द डिस्ट्रिक्ट ओपन की हैं या फिर आउटसाइड द बाउंड्रीज ऑफ द डिस्ट्रिक्ट ओपन की हैं, डज नॉट मैटर, यू विल हैव टू टेक द परमिशन ऑफ द रीजनल डायरेक्टर. Okay, Nidhi company can't decide to open the collection centers or branches or deposit centers or offices and offices by other names outside the boundaries of the state where lies the registered office. Now, if I talk about the question is asking you in which year at the earliest, सबसे जल्दी से जल्दी, as early as possible, Vinayak Srotam Nidhi Limited would have got the approval to open the branches. That is, in the same district they wanted to open up 3 branches, right? So what do you think, सबसे पहले उनको at the earliest possible उनको कब permission मिली होगी regional director से? So हमने condition पढ़ी है that it should have earned profits after tax for a consecutive period of 3 financial years. Only after that the Nidhi company can open up branches, right? So either if we see, the company was incorporated on 10th of July 2014. So यहाँ से if you calculate 3 years, so 3 years आपके हो जाएंगे 9th of July 2017. So 9th of July 2017 के बाद आपको परमिशन मिल सकती है कभी भी, जितना जल्दी मिल जाए बहुत अच्छा, बट इससे पहले मिल सकती है क्या? नहीं मिल सकती, right? So at the earliest, after 9th of July 2015, Vinayak Srotam Nidhi Limited would have got the approval to open. No, 2015 नहीं, 2016 भी नहीं, it should be 2017, right? It should be 2017. So this particular question, the answer would be C. Although मेरे को भी बोलते बोलते एक डाउट अराइज हुआ है दिमाग में, दैट हियर दे हैड मेंशन्ड दैट द नेट प्रॉफिट्स आफ्टर टैक्स कंटिन्यूसली विद इन द लास्ट 3 फाइनेंशियल ईयर्स, राइट? तो फाइनेंशियल ईयर्स भी अगर मैं देखती हूँ तो फाइनेंशियल ईयर सबसे पहले मेरा हुआ होगा 14-15, बिकॉज कंपनी वॉज इनकॉर्पोरेटेड ड्यूरिंग द ईयर 2014. देन मेरा फाइनेंशियल ईयर हुआ होगा 15-16, देन मेरा फाइनेंशियल ईयर हुआ होगा 16 and 17. तो 17 मेरा एंड हो गया 31st of March को, राइट? तो यहाँ से अगर हम देखें तो ये इनको तो 1st of April 2017 के बाद से कभी भी मिल जाना चाहिए था. अब मतलब कभी भी आप ब्रांचेस ओपन कर सकते होने चाहिए थे, बट आई डोंट नो, मे बी कुछ एम्बिग्यूटी है या क्या है, आई एम नॉट रियली श्योर अबाउट दिस. बट मेरे को अभी जैसे जस्ट प्रोविजंस को रीड करते हुए ये चीज़ क्लिक हुई कि वाई आर वी टेकिंग द डेट फ्रॉम द incorporation, why are we not considering the financial year for this particular question? I'm not really sure about it, but yes, मेरे दिमाग में भी question आया, तो I am raising this particular question to you. Options में ऐसा कोई option नहीं दिया हुआ जिसकी वजह से कोई ambiguity create हो and मुझे सोचना पड़े कि ये provision लगाऊं या ये provision लगाऊं. So according to this, the options given, this is the best suited answer. But yes, this is a question that has just popped up in my head. I don't know if I'm thinking it in correct way or not, but yes, this is the question that has come up in my mind. Maybe there must have been any logic behind this. Maybe I'm not aware of it right now. So okay, that's it. Let's move on to the next question. Let's not discuss anything which might confuse you right now, so you can ignore that part. For question number 4, the answer is C. Okay, let's move on to the next question. Next question is Nagarjun managing director of Vinayak Srotam Nidhi Limited desired to open a branch in Kannauj district, the other district where the Nidhi company was not incorporated, right? But changed his plan and rather opened a new Nidhi by the name of Vinayak Srotam Kannauj Nidhi Limited. What could be the reason for change of his mind? Choose the appropriate option for those given below. So see, if you think about it, the person is trying to open up a branch in some other district, right? Now once he thinks of opening a branch in the Kannauj district, how many branches would be there? See, we already had one company and इसी company के district के अंदर we had opened 3 branches already. Now if you think of opening a new branch in an area where no Nidhi company is located, then you will have to take the permission of the regional director. Only then you can proceed. So now in this particular case, if I see, if that person could not get the permission or the approval from the regional director, can he open up a branch? No. So permission of regional director is required in case you want to open up the branch which is exceeding the number 3. But if you open up Nidhi company, if you incorporate a new Nidhi company, do you need to think about this? No. So that is why maybe this is the reason why this person changed his mind from opening a branch to opening a Nidhi company. Okay, so in this particular case, if we see the options, Nagarjun, managing director of VSNL, could not open a new branch in another district because he did not get the permission from the registrar of companies. No, यहाँ पर रीजनल डायरेक्टर की बात होगी, रीजनल डायरेक्टर की परमिशन नहीं मिली होगी, मे बी बिकॉज ऑफ दैट रीजन ही चेंज्ड हिज माइंड. नाउ स्टेट गवर्नमेंट ऑप्शन इज टोटली इनकरेक्ट. रिजर्व बैंक ऑफ इंडिया से भी आपको कोई परमिशन नहीं लेनी होती, तो दैट इज ऑल्सो इनकरेक्ट. सो द करेक्ट ऑप्शन इन दिस पर्टिकुलर केस इज ऑप्शन नंबर बी. Right, so this was also related to rule 10. I don't know if it is given in the study material. I could not trace it. I'm sorry if it is there. It's my apologies in that case. Otherwise, if it's not there and they have asked the question, then you must be aware of it now, because they might put up the question in exam as well, which is although not correct, but क्या कर सकते हैं? If they have given a question in the MCQ booklet, you must be aware of the provisions, right? So that's about it, guys. Thank you so much for watching this video. I hope you all got the answers of your queries, and please study well, do well in your exams, be confident. Don't think about whether you'll be able to clear or not. Don't think about that for now. Just give your best, give your exams with 100% confidence and preparation, revision, and that's all, right? So all the best. I'll see you guys in the next video. Till then, take care of yourselves and bye bye.